What's going on, traders? Hope everybody's having a great weekend. My name is Shark. Thank you so much for joining me on our weekly analysis of the futures markets. We're going to go over some long-term charts on the E-mini S&P futures as well as the NASDAQ 100 NQ and take a quick look at some other data points that I like to use to help formulate a game plan for the upcoming week of trading. If this is your first time to the channel or watching the video, do not forget to hit that thumbs up, subscribe to the channel, and also don't forget to react if you are seeing the video in another location. With that being said, reminder that this video is for educational and entertainment purposes only and in no way should be viewed as financial advice. Well, first and foremost, as always, let's take a look at the economic calendar for the upcoming week and see if there are any data points that we want to be cognizant of that may affect the market. So let's look at that first and then we'll start getting into some charts. Okay. All right, Monday looks pretty quiet. We do have Fed President Daly speaking at 10:30 on Sunday, and some Fed speak on at 8 o'clock when the Globex futures markets open. Fed Speaker Waller is on at 8 o'clock. Monday, manufacturing PMI 945, ISM manufacturing at 10 o'clock. Not too much there, but some more Fed speak going on at 10:15 with Lori Logan and Goolsbee at 12:45. And then it looks like Powell is actually speaking at 1 o'clock. I'll pay attention to that, but usually if it's not FOMC, it's really not too much of an issue. Still always interesting to hear what he has to say, of course. Tuesday, June 3rd, we have more Fed speak from Goolsbee at 12:45, Cook at 1 o'clock, and then Lori Logan at 3:30. Let's see, Tuesday here, Beige Book, 2 o'clock, Final Services PMI 945. Paying attention to Beige Book. Thursday, the 5th, jobless claims coming out 8:30, but really, for me, the big data point for the week is going to be non-farm payroll on June 6th at 8:30. So that's going to be the big one. And that's all we got. Looks like pretty much just a lot of Fed speak, and NFP is going to be the main thing that I'm going to be paying attention to this week. All right, moving right along. As we're coming into the start of the new month, let's take a look at the monthly candle on a blank chart here and see what we can take away on the E-mini S&P futures. And after a big drawdown in the month of April, getting back over that 20 period moving average, and now we are back over that monthly 9, so things are definitely looking a lot better as far as the bullish perspective is concerned on the longest time frame here. And we're coming out of that overbought conditions that we've been watching on the monthly, but has it really cooled off enough to say that we're going to say 7,000 just right away? And for me, no, not necessarily. So I think that it's very possible that we end up staying maybe in a 2-month range here. Well, I can't say really a 3-month range because of this giant wick, but just looking at the monthly range from March and May, it seems like these 2 months so far have pretty much closed right and matched each other at the highs and pretty much at the lows there. So that is interesting. With that being said, it is constructive that we have reclaimed that monthly 9-period moving average at 57.58.15. So we'll just call it 57.58.25. And that is looking good. So as long, certainly from this monthly perspective, as we can hold half the range of this monthly candle, I don't really see any issues from this perspective. And that 50% retracement, of course, it's not going to stay like this, but that's where that monthly 9 is, right? Pretty much at that 50% mark. Of course, that's going to start to drift up slowly as well. So that I'll be cognizant of that. Either way, what's got to happen here for the bulls, right? They've got to get over the monthly highs from March, and that is sitting pretty much right at that 6,000, and we did talk about that already. And we did briefly, we got 608 last month was the high for May, 6,008. So no confirmation there. As you can see, obviously the wicks pushed the price back down a little bit, but from the monthly perspective, you can certainly put kind of uh, a resistance or area where structure will be broken. If in fact we do get up and over, we can then really talk about those all-time highs being back in view. And it's really only 166 points above from the highest point from those 2 months. So it's really not that far away. It definitely can be done with ES over a little bit of time here. So not that far away, but of course this needs to happen first for us to be able to project for those all-time highs being back in play. All right, now let's move right along to a weekly chart and see what we can take away from that perspective. Now we do have pretty much a weekly bull flag here, kind of trying to break out, and we were talking in last week's video, right, about this balance range now, and we have now a 3-week balance that is going to be, although it can be difficult for traders to trade in a range, I think it's important, obviously, just to know the conditions that you are in. We've talked about a lot the concept of, range expansion, range consolidation, markets running, markets resting. Right now, we're in that rest mode after this huge move up from the bulls after the bears looked like they were going to, end the world and the economy. But of course, the stock market long term is designed to go up. And we did look at that monthly chart. Right? And if you go back, we did talk about what was going on from the bigger picture perspective of that monthly higher low being put in. And that's indeed what ended up happening. But as it stands in rest mode here, and it certainly is tradable, but we're not going to have that big range expansion until, right, we break this balance, right? And as I mentioned, it is tradable, right? Let's look at the balance range that we're in. It is about 255 points, 240 points thereabouts on the ES here. So certainly tradable, but we're going to have to, again, break either in or out, or stay in or break out and displace above, right? And this will give us our structure shift in the market and change our state of delivery. Either way we go, and that's why, of course, we'll have a plan for both. And we talked about this range in the last video, and you can see here we did have it mapped out, right? We did have the 2-week balance mapped out, and look where the lows were. We pretty much didn't get over or under, and that really showed you that we weren't going to see that big next expansive move. They tried here, right, early in the week, but unfortunately we're unable to do it. Now also, another thing that is kind of happening, and I was kind of projecting to happen here, and I believe I mentioned it, these weekly period moving averages are now coming to an apex and also providing some confluence on the lower part of the balance range. So if we do come back down to that 57, 55, for example, that area, right, we have extra confluence right there for potential long to come up into our equilibrium, our 50%, and then if they can get over that, well, we'll look for that break of the balance range highs, right? So you can put in your equilibrium right there, right around 58.70 if you would like, and pretty much the lows from, what is this, December 16th, and which we did close over, right? The market's closed at 59.13, so we are over that. So as it stands, as long as we hold over in this upper part of the 50% retracement, that would be the most bullish sign for our next move up higher, right? We start trading down in the lower part. We're going to look to test the lows again, and will they break? Well, that's everybody's question. We don't know. Will the highs break? Obviously, we don't know. But we're here to react to price, wait for that displacement retest, and that's when you take that trade, right? So we don't know here what's going to happen, but we do have our range set. So I think that is very important and key. And, if we get under that 57, 55, 58 area, okay, we can start talking about where's the next area of potential market structure or liquidity that we would be kind of trying to retest and pick up some more potential buyers, right? And we did already talk about this change of character over here, right, when we were bearish, and we went over it again last week. And this is what the bulls needed to do to get us up higher. They did it. So as long still as this holds down here, basically at 5,500, everything still is okay. Yes, of course, we would be a little bit more cautious on the bear side, being underneath this prior balance, but all is not, so it doesn't mean we're going back. Just because we're underneath doesn't mean we're going all the way back down towards the April lows. So one step at a time, of course. All right, let's pull out our daily chart. And take a look at the chart that we have been working with. Okay, so you could see the highs here again, getting stuffed, 6,000, couldn't get over, right? And now when we had sold off a bit on Friday session, you could see we came into that 58.50 area, perfectly held here. And really structurally, we would have to be holding right the highs from the 24th, 25th. So, but under that 58.50 starts to open the door. I still really wouldn't get too scared about it or bearish about it, because we do have the highs right here as well, although I do not have them marked off. And maybe it would be appropriate here to have something just to denote it, so that way we are set. So right around 58.30. So that's only about 20 points or so if we break underneath. But if we get under that 58.30, then we'd probably be likely to come up and retest the daily 20. I would honestly think that this daily 20 is going to sneak up and start to catch up here into the 58.30. So if we do come down there, nice confluence for a potential long. If for a swing trade, we're also matching the lows here from the 22nd, and then we've got the highs from back in March, and we've got the highs from the end of March here and from the beginning of March as well in the 58.30. So a lot of confluence there for potential longs. If we do sell down, it will be interesting to pay attention to right there. But as it stands, we are over the 20. We're over the 200 SMA. We're over the 9 still, but bulls need to get back over 59.30, 59.28, right? We get back over that, then we can go ahead and see about trading back into those 59.55s, getting back over that 59.78, 80 would be next. And then if we can get over that, well, let's talk about 6,000 again and see what happens at that big major psychological resistance, right? Because if we get over that, I think it'd be free and clear up to the 650s, 6,050 on the ES. So there we've got a little bit of a daily plan for the E-minis as well. And let's get into some day trading levels here for the ES. Nothing really on our overbought or oversold. Let me go back really quickly and just take a look on the weekly, how that's looking. Okay, no problems there. All right, beautiful. And let's get into some of the day trading levels. Here we are. I forgot to update. Yeah, we really didn't get that much above, so just throw that on there. Okay, let me expand this. Okay, last week's video, right? We were talking about this trend line that needed to be broken for the bulls. And as you can see, the open really at Globex just ripped right through it. We were talking about that potential long trade. I did not expect. I think some news had come out. I can't remember exactly what had caused this big push. I think it was something with the trade deals going on. But either way, we were talking about a long trade, all things being equal. If we were just hanging out here, right? We were talking about a long and really also, waiting to see if we would get a BRB, a breakout, a retest here, breakout. Didn't even, do that. It just gave us the big stick, put in the higher low right here in the 5860s, and then just continued up higher for a good little bit. So that was a nice trade, really tough to catch, but as long as we saw that displacement, we knew the trend was broken, and probably here you would have to have been up, right around 12 o'clock to be able to catch this here at the 5860s for a next move. I guess, there was another opportunity right here at, well, basically the close on in the middle of the week around that 5888, 5890 area, and gave us the next big push up into the evening. So where are we now? Okay. Kind of stuck here, right? Bulls tried to push us up and find acceptance over this, excuse me, over this 59.22, 59.25, we can say. Need to get up and over that, right? If we get up and over that, and find that acceptance over 59.25, I'm going to call it, then we can talk about trading back up 59.50, 59.45, the next area I'm looking at. You can see right here some reactions with price. So that would be my next target. And let's do something like this. Push up. Down, right, boom, run into here. Now, obviously I don't know if it's going to break, could come back, double bottom, then we get the move up higher. Again, I'm just guessing here, or it can go straight through, I have no idea. But if you don't get this trade, wait for this displacement, come back, and come up 59.57, right? Over 59.57, we're going to call it 59.80. Well, then 59.90 basically, and then we'll look at that 6,000 once again up to 6,008, and that's going to be the big level. I believe we got in March, we got just a little bit over that 6,024. So we could push up a little bit over, but just be cognizant that whole area is going to be pretty important for the bulls, and a big area where we could see some sellers try to defend for the markets. Now, okay, I can't really get bearish until we break under 5,900. I think, under 59.05 opens the door, but okay, only 5 points down to the figure. So it doesn't really interest me that much if we're under that 59.05 to go short. It definitely would give me a little bit more of a quote-unquote short bias, or short bias to neutral probably, but have to see really a break. Now, the break under 59.88, now that's really, to me, is what is going to really kind of take away the downtrend completely, right? Trading in this area right here, it kind of gives us a bearish to neutral kind of stance, right? Because we're not making a higher high, or we're not making a lower low, right? But once we actually start to, let me delete this, okay, once we actually start to get under that 58.88 area, 58.85, okay, then we can start to talk about really seeing some trades lower, probably attack the lows here once again from the Friday session, and that would not surprise me at all on Monday, potentially. But if we get underneath Friday's lows, that's at 58.60 thereabouts, just a little bit lower, 58.52, right? Okay, so if we do get underneath that, well, then I will be really looking at the 58.50 30s for my next target. So, okay, something like that. We don't know, what path it would take, but this would be my projection for the market here. So, and if I'm going to say any further for the bears, maybe we get a bounce and then a true breakdown, and underneath 58.30, I'm going to say 58.15, 58.13 area would be my next target for the bears. All right, that's pretty much everything I'm looking at on the ES. Let's move on to the nasty NASDAQ, NQ, everybody's favorite Widowmaker, and see what we can take away from that perspective on the monthly chart. Okay, tech here. You can see tech's a lot stronger, and we talked about this in the last video. Tech really, tried to get up there toward those all-time highs. You can also see, it's a little hard to see actually, but with my yellow monthly moving average, but you can see on ES, remember, the monthly 9 was a bit higher, right? We weren't over it as the body of the monthly candle wasn't over it as much. This monthly 9 on tech is down by the 25% area. So it is way lower, and it's actually just underneath, and I believe that this is the weekly balance. Same thing we did on ES when we drew out that 2-week balance and wanting to see if it was going to create a third. We had this here for that. Now you're getting the 9 pretty much right at that weekly balance low, which was right around 20,375 area on NQ here. So that is interesting. This will probably sneak up a little bit higher. Right now it's sitting at 319 half, and so it probably about 50 points, 65 points below the balance range lows, but that's fine. That'll probably catch up right there. Just to be cognizant that it is just a little bit lower. You can see the two prices right here. So, all right. Let's keep it moving along here. Things are looking good. Big, pretty much bullish engulfing right on the monthly. Took out the highs from March. And we closed. And why do I have two levels here? It's probably from the daily. Let's take one off. And I want to get the low from December, which is 940. Okay, cool. I'm pretty much there. All right. So 940. Why my thing froze? Sorry about that. All right. 20,000. 940. Okay, so we are certainly above that, closing in the upper part of the range. So it is in the bull's court now, right? Sideways, sideways, sideways. We could maybe set up for that big monthly bull flag breakout. Let's break it into the weekly. Okay. Now, one thing I will say here on the weekly, pushed up, couldn't get above, failed back below, right? Want to see, it does look like that weekly bull flag, and we were talking about that, but the buyers tried to push up and were rejected. You can see it here clearly with that upper wick. Did we trap inventory? That's the question here. Did we trap inventory in this area? And now they are going to sell anytime we kind of come back up here and try to get back, get out at least a better price than where we are. That is very possible. But what we really need to see is that break of that 20,935, 940, right? That's what's going to open up the doors for the bulls. We do have the weekly lows from the week of the 19th, right, sitting around 20,740. So I will be cognizant of that. But if we really see a sell in the market, I would say that it'd be pretty likely that if we get under that, and certainly if we break those weekly lows, that we're going to come back down and retest those balance range lows here, right around 20,380 area. The other thing that I was mentioning on ES with that 9 and 20, you can see that they on the E-minis, they were kind of at that apex, right? They were converging. Here on the weekly NQ, we're getting the cross again, kind of really indicating to us that bigger strength in the tech sector versus the S&P 500. So that is interesting to see as well. And just another kind of note there that the tech market is stronger and are already moving over those balanced lows as well. So really nice confluence here. If we do see sells down to that 20,000, 380s, that might be an area where you could say, all right, I want to pick up some longs for a swing. Not only do we have the weekly balance range lows, but we also have that weekly confluence with the 9 and 20. So that is a very something interesting there for 2 points of confluence, as well, of course, being in an overall uptrend. And that would just really, what would that really be giving us, right? Either daily or weekly higher low to be put in after we just kind of tried to make a higher high. So I can see that certainly being a scenario as well. All right, let's get into the daily chart really quickly and keep moving along. Interesting here on the 1 year chart, pretty much the highs that we hit was very close to those value area highs. And when they're sitting at, what is the high? It was 850, 875. The high on the value area highs volume profile is going to be 21,912. So close. We didn't quite get there, but that will be interesting to see if we stay within this presented value. Okay, where are we going? Going to our daily. Let's go over to our daily chart. I'm going to have to start to extend some of these. All right. All right. So now we've got the 200 here crossing over the 20. Another positive sign here for the bulls on the daily. Momentum. We do have a little bit of a divergence here. We've got this uptrend here, but we've got Momo coming down. So I will give bears a little bit of a bearish divergence here on our overbought, oversold indicator. So that is interesting. I will note that. You can see here we almost came into the 21,900. Didn't quite get there for that tippity top short, but very, very close. Knowing that supply was pretty much there. And we did try to close underneath the 9. They were unable to do it. For me, it's going to be a hard, bigger picture short. Let's get in there. Unless we really start taking out basically 21,000, right? That's going to pretty much open the door for me. And we've got the 9, about 100, the 20, about 100 points under the 21,000, so 21,900. And you got the 200 SMA sitting another 100 points lower at 20,800. So two areas here, as well as the pivot 20,850. So big zone here where we could potentially find some bids. But under 21,000, I'd really be looking for more of the sells from a bigger picture perspective. Anything over, if we start breaking under that 20 again at 20,800, I think that will open the door for us back down to 20,600. 680, 675 would be my next guess if we do come back down to this area, right? But as it stands, as long as we really hold over 21,000, nothing really bothers me in any bigger picture structural context. But you can see, I mean, mostly we're just, riding sideways here in the market. Oh, that's the wrong tool, right? You can see we're just stuck in a box. Right, so what's it going to be? We did not have the acceptance here, but they did. Bulls did fight back. So are they going to be able to get back over 21,500? Let's see. I think 21,470 opens that door up to 500. And then if we get over that, we can go ahead and test the highs from the 28th and get a lot of kind of a double top area, triple top really. Just look at the highs from the 20th, the 21st, and the 28th there, as far as possible, an area where you might say, okay, I'll be looking to potentially sell this. And I'm going to put in a little daily level there for us, right there, 21,560. Let me just see the highs here. We have 560. This is 62. This high is 67. All right, so close enough there. Beautiful. Anything over that 21,000, 560, 570. All right, let's see about 21,630s, right? And over that, we'll try to see if we can get back up into the 800s. I don't know if that's going to happen or if we end up just obviously trading here still sideways, but all it takes is one news tweet, as we've seen, and everything can change within a minute. So we'll just be cautious with that. Okay, let's get into some day trading levels here for us. Oof. Look at this sell-off. Caught the low here. You would have had these levels from last week's video. Caught the lows of the Friday session. Look at that. And pretty much the highs too. All right, so similar situation for the yes. We could say right here, we're not overbought, we're not oversold. So actually, it looks pretty much like a 30-minute flag, right? We can definitely make that case. 9 and 20 just underneath us, crossing under. Looks like potential bull flag situation here setting up for us, but bulls need over 21,380, right? We start to get over that, we can come into the 400s, but the big area is going to be anywhere from that 21,420, and just above we've got the 10-day 30-minute volume point of control at 21,445 basically. So got to get up and over that to make that higher high, and over 21,466. Now that's going to give us the next big move up into 500, 513, 515 area here, which is right by our 30-minute 10-day value area highs. So what's it going to be? We do have the 200 right above us as well. So can we get something like this, and then a push above, up? Okay, so maybe we come back, and then we reject. Anything like that is possible, right? Or we fail under. Now again, we have a pivot here at 21,344, but the 9 and 20 are right at the 21,317, 315, 320s. So for me, we still have to contend with those moving averages. I think under 21,340 opens up the door for a little bit lower, but let's see how price reacts when we do come into the 20 and the 9 here on the 30-minute. If you want to quote unquote look for a little bit more confirmation on a true neutralization of the trend under 21,295, I think that opens the door for us really for the bigger sells. and then we can look down, back down to 21,000. 240s, anything under that. Value area lows right around 21,200. So that would probably be my next target and an area where I think we could potentially find the bids once again for a possible scalp trade back up about 40 points to 21,240. But we could reject right there, right? Very possible. Or they break us over, we come back, displace, retest, and then back up to 21,000, 290s, 300. Right, so that's what I could be also looking at here. We start to get under the 21,200 though, 21,175, another 25 points lower, but under that, okay, under that we'll be really looking to test the Friday lows again, under 21,175, come down 21,125, and then certainly under that we'll attack those lows right there at sell side. So I don't know what that path will look like, but maybe we could say something like this for the bears. Either way, we have a plan for both sides of the market, and let's see if they can get us up and over that 21,420 for the bulls, or start to let the bears have some fun under 21,300. All right, that's pretty much everything I wanted to go over for the indexes, and let's move right along here. Let me check on the time. Okay, let's move along for our other data points that we like to look at. Okay, all right, here, let's look at what Vol-D was doing. Oh, shoot. Vol-D, Friday session, a little weak. Nothing too crazy with the outflows. So, kind of, this 22 kind of ended up seeing some bids there. So, nothing too crazy. A little bit outflows. Although we did stay, for most of the week, we did stay below the zero line on the ADD, which I think is interesting here. Had a little bit of a hard time getting those positive readings in the advanced decline, but I do think that that is a little interesting. Another maybe, I would say, win or something to be aware of for the bears, as far as some potential strength. Look at this, it just has not been able to get up and over and spend any of the significant sessions for this week over that, so that is interesting. All right, let's move along here. All right, actually, since it is the beginning of the month, pretty much, let's also look at how the sectors did this month. Okay, let's see, XLK up 10%, XLI also leading here, XLY, XLC with communications middle of the pack, just over 5%, banks just about almost 5%, 4.4%. The worst performing sector, XLV, down 4.4%, almost 5% there. Energy pretty much flat. Real estate up marginally, and utilities right in the middle there. And XLP, consumer staples, nothing really too much there. So I would say the risk on sectors with communications, consumer discretionary, tech, and the banks, the strongest performers this month. And that's usually more of the risk-on sectors, right? If we had more of a risk-off market, we'd be seeing real estate, consumer staples, utilities up. So everything looking pretty good for the monthly performance on the sectors. Not really too much of an issue there for me. Okay, let's take a look. Yield curve, everything's flat there. Nothing's really changed too much. One-day VIX, nothing really, nothing really saying too much volatility. Excuse me on that cough. Not too much volatility. We talked about it last week. We need over 2160, and then volatility will start to kick back up. But until then, nothing really going on that front. All right, let's look at how many stocks are trading over their 50 period moving average and their 200 period moving average in the S&P 500. And we did kind of top off right around that 77% on the 50 period moving average readings here, but we came in really, displaced higher, locked in what seems to be a higher low, and now coming back up again. So, but really our marker, our benchmark has always been that 50%. So as long as we're over 50%, I'm feeling good here on the short-term breath. Let's try to see if the 200, of course, a bit slower moving. The 200 not over the 50% quite yet, but it still looks like it could potentially be on its way getting back over that 50%. So not really too much of an issue there that I'm worried about. The 50, of course, is a faster moving average. That's the one I kind of pay attention to a bit more. All right, let's look at new highs versus new lows. Not to be surprised here, pretty much still at the zero line. At least we're over the zero line, if you want to say that. 21. I don't really expect a high reading here because much of the market is still in that bounce back mode, and we're not quite there as far as all-time highs on multiple markets. So pretty much flat, but over zero. Nothing really here that sticks out to me. Junk bonds in isolation coming back up, but into a big area that we've had some trouble before over the downtrend. Here, I guess a little bit of divergence on the S&P and the junk bonds. You can see this is mild flat to down right here, while junk bonds moving up. This to me would be pretty much probably a bullish divergence with the bonds, with these high yields coming up and this flat. So I would say that is a bullish divergence there. Let's look at our 7-year. Okay, bonds getting a bit of a bounce, right? We talked about them being pretty oversold. We got over the 85.25, 85.30, displaced higher, came back for the retest, boom. Okay, as it stands, as long as we hold over 85.30, look for yields to come back down, bonds to go back up, probably up into that 87 area will be the next test to see. You can also say that let's look at the lows from back April 20th and see if they can hold over 86, basically. I think under 86 might be a little bit of warning sign. We'll come down to that 85.20 area, but again, that's the main area that needs to hold for us to get real close to that 87, and we'll see. And you can see here yields are pulling back on our ratio, but still over the 50 period moving average. So this has got to get underneath. Where's our 50? It's at 1.07. So if we start to see this ratio come underneath that, then we can look for TNX to sell down more and TLT to go back up. Credit spreads, let's look at our risk. LQD here doing its thing. Okay, let me extend the trend line here. Trying to go for the breakout. Okay, so this is good. It could reject here, of course, coming into this trend line, but I do like the fact that it is trying to make a move. We have our spreads still underneath the 50, so here still saying risk on for the bulls. Any divergences in the Dow? I hadn't seen any. Not really, nothing there. So take a quick look at the dollar and the yields. Okay. Yield staying under 40, 45 is key. Under 44.88 better. Boom, you can see the rejection there. Looks like this could come back down. Let's look at the highs again. Well, inverse it, right? 420 highs, right around 44. But everything we get under 44, 43.60. I think it looks like we are going to be heading back down to. and that should give some relief from that perspective. Underneath that 43.6, you can see a bit lower, maybe down just straight to 43. Anything under 43 down to the 4.26s, and then potentially back down to 42. So I think from what it looks like to me, bonds have a little bit higher to go potentially, and let's see how the yields react right around that April 20th high or low, depending if you're looking at the bonds or the TNX. Okay, so the dollar, let's see what happened here. Got a bit of a rally, could not sustain over that 125 cents. That's really what needs to happen. Get back over 100 as it stands here. As long as we stay under 99.60, this 4-hour chart looks pretty much to me like it's going to sell back down, and we're going to see 99 again on the dollar. Anything under what is this here? 98.90, and then we'll look to retest the lows on the dollar at 98.70. So we'll see what happens there. Now let's look at our put to call ratio. Anything cooking? Nope. And even. The VIX. Okay. Had a brief spike. Could not sustain over 22. It tried. Couldn't sustain over 20. Let's just stay under 20. Right? Stay under the high from the 30th. Pretty much match the high from the 12th of May. So stay under here. To me, it looks like this is going to potentially sell back down. As long as we stay under 20, we could see that 18s again. Under the 18s, 1750 back down really to that 1575, and we'll see what happens there. But as it stands, looks like VIX wants to sell to me. But of course, one tweet, one news release can change that. So, and let's look at our VIX futures. Looking good here. Still in contango. And the VVIX, volatility of the volatility, under 100, under 103, under 105. Just got to get under 93 half, under that on the VVIX, and we should see markets go higher and this to fall back lower, probably back down to the 80s, the mid 80s, maybe 85, 84 half or something like that. So, all right, I think that's everything I wanted to go over today. I didn't think when I opened the skew there was anything that was too interesting. Nope. No real warning signs here. Inverted ET coming down a little bit. Okay. All right. Well, I think that's it. That's going to do it for this week's video. Thank you so much for joining me. Don't forget, again, to react to the video. It helps out the channel a lot. And again, if you're seeing it in other places, don't forget to react as well. And I really appreciate you guys taking the time here to prepare for the market ahead with me. And as we close out every video, remember, a prepared trader is a profitable trader. So pat yourself on the back for doing some prep and having some levels ready to go, so that way we are always reacting to what the market's telling us instead of trying to be in that predict mode, right? So plan your trade your plan. Thank you again so much for joining me, and I will see you out there in the markets on Monday.